Back to the charts with Big Boss Crypto, bringing a day trading analysis on Bitcoin and on Chainlink. Today I'm going to talk to you about this week's price action because we have the FOMC meeting on Wednesday and we have a volatile week ahead of us. Bitcoin has been moving nicely and aggressively to the upside. It's been a quick move. Is it a trap before the FOMC meeting? Well, let's look at the charts. First of all, we're gonna take a look at the volume candles because the volume candle shows us where the money is. We have a lot of orders to the upside and to the downside, but I think if we zoom out a bit, we can see that there's more money to the downside than it is to the upside. I marked the volume candles which haven't been recovered yet in red to the downside and in green to the upside. And as you can see, a lot of volume candles are present to the downside, which means there are a lot of buy orders in these areas, as you can see here. And basically, for someone to pick up those buy orders, someone needs to sell into them, and that's where the market maker comes in and fills those orders and shows his presence and makes money in the meantime. If we go to the upside, we can see we have one volume candle here at 23.6k. If we break this high, we could move all the way up to 26k. If we break that, we could go all the way up to 28k. It all depends on what happens after the FOMC meeting, which is on Wednesday. But basically, your first target to downside if you want a short is at 21.5k. If you want a long, first target is 23.6. If we break that, you could ride out all the way up to 26.6k approximately. If we take a look at this week's news event, we can see that we don't have anything going on today. Tomorrow we have the Chicago PMI and consumer confidence. It's basically not going to give us much in terms of market maker moves. However, the big day is on Wednesday, so you need to prepare yourself mentally on Wednesday because it's going to be pretty volatile. I will not be in any trades during Wednesday. I will make up my mind the day after the FOMC meeting because that's usually the case. They spike price up and down during the press conference, and the day after you can clearly see a direction of where things will go after the FOMC meeting, and that is usually the case. Previously it has been so, and I've praised my trades after that, and yeah, I think it's gonna go down that way this time as well. We have the federal funds rate increase on Wednesday. It will basically show us how aggressive the Fed will be. The market is expecting 0.25%. But however, some are talking about a 0.5% rate increase. And as you know, I showed you on New Year's Eve or around New Year's that the target for the Fed is 5.25% this year. And we are pretty close to that right now. We are at 4.5%. So they're going to increase it by approximately 0.75%. And that is where they're going to pause, and then they're going to basically print money again and lower the federal funds rate. But that is somewhere in the future. It's a pretty big deal. It has been a market mover previously, and I think it's going to be even more so this time because the markets have pumped prior to this press conference and release of the federal funds rates. So we'll see what happens on Wednesday. Not financial wise, but I think you should take profits on your trades if you are in any, and close some of them before the press conference on Wednesday. However, it's of educational and entertainment purposes only, I say this. If we look at the liquidation map, we can see clearly still there's a lot more long liquidations than there are short liquidations in the near term. If you zoom out a bit, it's even clearer that there's more money to be made for the market maker to the downside than it is to the upside. You can see here these big spikes. Approximately $1 billion from 22k down to 17k. And if you go to the upside, we can see that there's less money to be made for the market maker if price goes to the upside. And I think it's basically too much money, even if we are technically in a bull run or if we were not. There's still a lot more money to the downside than it is to the upside. I don't think the market maker is going to grab that money because that's basically their business model. So with that in mind, trade safely. And yeah, if we take a look at Chainlink, then we can see that we have some volume candles to the upside left to be taken. We have close to one at $7.2 in the recent drop today. And we do have also to the upside 2 big volume candles which hasn't been recovered for a while. We have them at $8.2 and at 9.130. Could possibly happen if the FOMC meeting turns out favorable for assets. However, I don't think that's gonna happen because we had a quick pump to the upside, and you know, quick pumps indicates a quick reversal as well. That's usually the case, so you have to be mindful of that. I'm not saying we're gonna have a new low next week. I'm just saying we need to have a retrace in order for a sustained upwards trend. And speaking of spikes down or drops down, the targets to downside are $6.5, $6.2 approximately. And if we drop even lower and Bitcoin goes below 20k, we could see ourselves with a $5.8 Chainlink. Great buying opportunity in my opinion. That's it for today's day trading update. I hope you learned something today, and we will see each other before the FOMC meeting on Wednesday. Take care, Big Boss out.